Good evening and welcome to another episode of the Weekly Market Wrap. My name is Daniel Ang. Today is, of course, June 29th. We are practically on the last day of the month of June. Of course, we have tomorrow, the 30th of June, being the last uh, day for the calendar day for the month of June. But practically, I think we are at the tail end, and what's going to come in July is going to be even more unsettling. I am of the opinion that the ceasefire in the Middle East between Iran and Israel is likely to lead to further escalation because I believe Israel doesn't want the ceasefire. Okay, so at the end of the day, I think as investors and traders going into the month of July, it's definitely going to be very, very volatile, and it will be very useful to know what is really behind the various drivers of markets. So in today's episode, we will be talking a little bit about the other drivers. Principally, I think there's a lot of things that's going to come into place for next month. Okay, so we will go through each and one of them and stay focused. Now, before we go into the content itself, I want to remind you that this presentation is not an offer to buy or sell any kind of securities, be it FX, CFDs, or any kind of margin financial products. And the trading of any kind of margin products do carry the risk of loss. So be aware of your own risk tolerance before you attempt to trade them. And I'll be sharing with you my views on the various markets. And do remember, these will be my views, and it has got nothing to do with the sponsor IronFX, which has been sponsoring my events for more than a year now. Now, of course, the content of this presentation has not been vetted by any regulatory authority. So if you are okay with that, we shall proceed. Now, of course, the risk that I mentioned last week, in which the Iranian parliament has actually approved if the need arises to actually close the Straits of Hormuz. Now, the Strait of Hormuz actually is the opening in the Persian Gulf, okay? And we knew for a fact that a lot of oil-producing countries in the Gulf region, including Saudi Arabia, Kuwait, Iraq, UAE, and even Oman, use these narrow straits to export. Tankers that ply this waterway contribute something like 20% of the entire world supplies of oil. So a lot of oil and gas passes through here. That also include natural gas by Qatar. So it's a very, very critical waterways. And if the Iranian actually closes this waterway, because it's a very, very narrow stretch of waterway sandwiched between Oman and Iran, then tankers that ply this waterway will be at risk of being hit. Now, of course, Iran doesn't need to actually bomb the straits here. All they need to do is to create the tension to make it sound very, very dangerous, as if the straits is actually closed. Premium for oil tankers will definitely shoot through the roof. Okay, as it is, we can see that insurance rates for oil tankers plying this Gulf of this Persian Gulf has actually gone up a little bit. Okay, so the risk is always there, and of course the U.S. Secretary of Defense has actually reached out to China to try to get them to talk to the Iranians not to block the waterway, but and purely because they think that China will be the biggest victim if this strait is eventually closed, because China buys 80% of Iranian oil. But that is not the case, because 10 days before the conflict started between Iran and Israel, China and Iran has actually opened up the rail runway that actually is currently operational. So, if worst come to case, the Iranian will still be able to send their oil to China via this railway. In fact, it is more advantageous because it takes about 30 days by sea to transport the oil to China. Now with this railway, it only takes half the time. Reportedly, it's 15 days. So actually, the Iranian and the Chinese are not too concerned with the closure of this waterway. But the rest of the world will get it, because the rest of the world still depends on this waterway to a large extent to receive their oil. Okay, so watch out for news that if and when the spiritual leader of Iran, okay, Khamenei himself actually give the go ahead, it is already ready to go ahead. Okay, meaning to say that Iranian's parliament has already endorsed it and is just waiting for the final go ahead by the spiritual leader. Okay, so again, right now we have a bit of a peace, but this peace in my mind is not going to be very lasting because from day one we knew that the objective is not about curtailing Iranian nuclear ambition. Okay, it is always about regime change. So if regime change is the ultimate objective with the spiritual leader still very much alive, I think at some point Israel may actually take it upon themselves to actually eliminate him. Now remember, President Trump has actually said that he is not in favor of eliminating the Ayatollah Khomeini. Okay, and now his tune has actually changed. So now it's all about regime change. So I am not very positive or even optimistic that the peace between them can last for very much longer. I give it top side maybe 5, 6 weeks, and I think it will all come to grief again. Okay, just be aware if violence between either the Israelis or the American actually bombing Iran again, I think all hell will break loose. This time it will be more catastrophic because it will very, very, very sure will bring in the Russian and the Chinese into this conflict. So we will have to continue to monitor this. And if that's the case, I'm of the opinion crude oil is still one product that we all must be very, very focused on because I think the spike in crude oil, which we saw on Monday in Asia opening, was a opening salvo. Although the price of crude oil after opening up at $78 crashed all the way down to $64, now it is hovering around the $67 range. Okay, but I think it is already warning us that the possibility of another flare up, violence in this area here is going to cause oil to perhaps shoot for $100 per barrel. So that will be highly, highly inflationary. Okay, so the product to watch to me is still gold, is still oil, and whether that is going to be positive for equity markets, that may not be the case. But so far, we have seen all this violence has not led to a major sell-off in U.S. equity markets. But again, we are in early days, okay? But technically speaking, equity markets appears to have momentum, but we will have to be very, very careful chasing this. To me, is the last leg of a multi-decade rally, okay? We are almost at the tail end, but no, before you go in to sell, be very careful. I think the timing is off a little bit. We will have to continue to monitor equity markets reaction to further violence if and when they flare up again. So here we have we have President Trump is there are calls, okay, within the Democrat Party to actually impeach President Trump for launching an attack on Iran's nuclear facility without getting the approval from Congress, because the act of war can only be authorized by Congress. Okay, so Trump had decided to strike out at Iran nuclear facility, and he does not call it a war. Okay, so remains to be seen whether any further impeachment on President Trump will gain any traction. But you can see that there are attempts to actually clip his wing because now the man is actually behaving more like a dictator rather than a democratic leader. Okay, so we can see that there are voices that are not very happy with the way he conduct his affair, and we are only into the fourth month of his second term. So we can see that this is not something that the Americans are very happy about. So we will continue to monitor this as well. But I don't think it will stop Donald Trump, okay, because he is being classic. He's behaving exactly as what he has always been. Yeah, he's outrageous and he doesn't think that he need to get Congress to approve any of his action. Okay, so it will be very, very interesting to see how he's going to serve out the balance of his second term. Now, you can see that this is a change of tone. Remember, when Trump talks about hitting Iran, he's talking about only trying to clip Iran's ability to produce the bomb. Okay, now he seems to say very much in line with Israeli Prime Minister Netanyahu, saying that he wants regime change. Okay, so he's sending out balloons to see if the American public is behind him. But we can see that this has always been the ultimate objective to actually create a regime change. And we already know who he wants to be running Iran. We know that the previous king, which is the Shah of Iran, haven't been toppled uh, uh, during 1979. Okay, now his son is likely to be groomed to take over Iran if they get to change the regime. Okay, so this is something that we also know for a fact that this has always been the objective, regardless of what they have been trying to tell us. Okay, so this is the ultimate objective. Until they get a regime change, I don't think they will they will slow down their rhetoric. Okay, I think Israel is still very much still looking to continue to attack Iran until such a change actually occur. Okay, and we also knew very strangely the Iranian actually retaliated. Okay, by trying to target U.S. bases in that region. Uh-huh. And one of the bases was located in Qatar, and that's the largest military base. The funny thing here is that before they actually launch the, the retaliation, they actually call up Qatar and tell them that I'm coming. Okay, and this of course has alerted the Americans, and then they were already getting ready for the incoming missiles. Okay, nothing was destroyed, nobody died in this counter attack, and that is to me very, very strange. Why warn them before you actually strike? Okay, so I think this is more like a face saving operation. Okay, we also knew for a fact that despite what President Trump has been telling us, that the three nuclear facilities has been obliterated. Okay, but satellite photos shows otherwise. Okay, so there is the possibility that maybe Trump is doing Iran a favor, okay, by launching this attack to satisfy Israel's demand that U.S. bombs those facilities, okay, because in the earlier part of the war, okay, this war only lasts 12 days. At the beginning of the war, Israel has already launched attack on the nuclear facility. So when the U.S. bombed those facilities again, it was the second time coming. So those materials that they want to be able to protect them, they have enough time to actually move them somewhere else. So the fact that satellite photo shows that the tree facility was not totally destroyed provides the rumor that maybe perhaps Trump is doing it to show the Israelis that he will do it, but with no major effect. Okay, so maybe that is the reason why when Iran wants to hit Qatar Air Base, where the U.S. bases are, they actually warned Qatar first, knowing Qatar will inform the Americans. So that to me is possible because both doesn't want to get into protracted war if they can afford it. Okay, so I think they are just doing this for sure. Okay, because at the end of the day, nobody died. Okay, so maybe that is the reason behind this retaliation by Iran against U.S. bases. Now, this is something terrifying. Okay, this guy here is Dmitry Medvedev. Medvedev. Okay, and he did mention that countries are queuing up to provide Iran with the actual bomb. Okay, now remember, the Russians have thousands of nuclear bombs. For them to provide some to Iran, it will not affect their military posture. We also knew from news report that supposedly also says that Pakistan stands ready to provide nuclear bomb, and so is North Korea. Of course, I don't think both of these two countries are in a position to provide Iran the bomb. Okay, but I think Russia definitely will be able to do so without compromising their own military posture. So that being the case, it could lead to a very, very rapid escalation. Okay, so nobody actually wants to see nuclear bomb being fired. But I think this is stating the position of Russia, saying that if further attacks on Iran does not rule out a possibility of them actually sending ready-made bombs for the Iranian to use against Israel. The fact is, Iran doesn't need to produce the bomb, or they already have enough material to produce a dirty bomb, okay, to create the radiation that will be equally devastating, okay? So don't have to produce the actual bomb. They already have all the basic ingredients ready, and they also have the delivery system that can penetrate Israel airspace to hit their target with precision. So again, at the end of the day, this violence that we see between Israel and Iran, I think has been fought on the basis that Iran cannot fight back. But I think the Israelis have seriously, seriously underestimated Iranians' resolve. And their technology has proven that the Iron Dome is not impenetrable. Okay, so they have succeeded in actually hitting Israel. There are reports that say that 1/3 of Israel has been destroyed. Okay, meaning to say that those bombs and missiles that Iranians sent over has actually done a lot of damage. There is currently a blanket blackout as far as the media is able to report what's really happening in Israel. So we do not know for sure what is the extent, but there are already others that has been telling us, at least in alternate news media, that the damage is actually quite extensive. And that's the reason why Israel is suing for a ceasefire. But I think this ceasefire is definitely can be seen to be giving Israel some breathing space for them to restock their weapon system, okay? Because they have actually used up quite a bit of their ammunition, and they're hoping the Americans can provide them with replenishment. But I think the Americans, as far as they can, I think they're trying not to get too much involved. That's the reason why we see that they have been trying to extract themselves out of Ukraine. But this involves Israel. So I think the American hands are pretty tied up. Okay, whether or not they can actually extract themselves from the Middle East is something that we want to continue to monitor. In my mind, there are many flashpoints, not only in Ukraine, not only in the Middle East. We also see a bit of a tension between Thailand and Cambodia. And it seems that there are reports that the Cambodians are on high military alert. So anything could also happen in our part of the world. So there are many flashpoints. So we can see this is the report that I told you. There are various US military bases in the Gulf surrounding Iran. Okay, so the biggest being the air base in Qatar. And you can see this is just across the Persian Gulf. It's not very difficult for them to hit this with precision. But the fact that there was no major damage shows that this is just a for show attack. There is no real resolve to take out US military bases. Okay, so this is the current situation. Market got excited for a while, but eventually, when reports came in that there was no damage done, the market actually dismissed this piece of news. Here we have both countries agree to a ceasefire. And this is very interesting because hours before the ceasefire go into effect, President Trump came on to announce a ceasefire. But right after he made that statement, Israel accused Iran of a violation of the ceasefire. But Iranians said, "No, I have not agreed to the ceasefire." So there was a bit of confusion at the beginning. Okay, Israel actually sent a salvo of missiles launched into Iran. Okay, and good thing Iran did not retaliate this time, because if they have, then the ceasefire would have been broken. Okay, so right now we will have to continue to monitor this ceasefire. to me, it will not last because, like I say, Israel is very determined to take out the current regime in Iran. Okay, they have not achieved their total objective. And when news comes in to say that the three nuclear facilities were not completely destroyed, it gives them even more incentive to try one more time. Okay, so in my mind, this violence in the Middle East is highly unlikely to have ended. Okay, if not for anything, I think it will flare up once again in the coming month. If I think this is going to be the case. Okay, North Korea has offered military weapon to Iran, but this piece of news hit on Monday, but nobody take them seriously. Okay, but it is something that the market took notice, because if this is something that can possibly happen, then of course it changed the calculation in the entire Middle East. If other nuclear power can provide the bomb to Iran, then there is no need for it for Iran to produce the bomb because they already have the delivery system. Okay, the Shahid missile system has proven to be has proven its worth in the 12 days war. So we will continue to see if any more countries offer make an offer to Iran as far as this is concerned. Okay, now as far as economic is concerned, we have back-to-back Fed official. Bowman is the second one. She spoke on Monday, right after the previous one was Christopher Waller. Okay, he also made the same call for a rate cut in July. So the 2 Fridays ago, Christopher Waller made the statement that he will support a rate cut in July, and now we have Michelle Bowman on Monday also make the same call. So the pressure right now is growing within the Federal Reserve to actually not wait for data to show up to say that inflation is going to be a problem. Well, I think right now the focus will actually shift to the labor report, which is coming up on Thursday instead of Friday. Now, Friday is US National Day. We have the July 4th celebration. So where non-farm payroll usually is revealed on Friday. For this coming week, it will be revealed on Thursday. Okay, so just be aware that the date has been moved 24 hours ahead. Okay, and incidentally, Trump said that he has four candidates in mind that he wants to nominate to take over Jerome Powell. And two of those names actually is Christopher Waller and Michelle Bowman. So it's no coincidence. I think both of them is likely to be Trump's men because right now they are talking about rate cuts, very much in line with what President Trump wants to do. Okay, so if these two, either one of them actually become the next Fed chairman, they will definitely be towing Donald Trump's line. Okay, so it will also imply that the Fed is no longer independent. So that is the takeaway here. If the world view the Fed as not being independent, then obviously the Fed will be less effective uh, in in their monetary policies. Okay, so the Fed chairman himself has actually testified 2 days in a row in Congress in his biannual testimony to Congress about monetary policy, and he repeated the same line. He said, for the time being, we're well positioned to wait to learn more about the likely cost of the economy before considering any adjustment to our policy stance. So in short, he said no rate cut. So the next month, July, we have a FOMC meeting. There are some who think that maybe the Fed will surprise us by cutting interest rate in July. But if we believe Powell, then it is likely not likely the case. Perhaps the next FOMC meeting in September, because August there is no FOMC meeting. So after July, the next one will be in September. A lot of people and pundit has been saying that September is the more likely period in which for the Fed to actually act. By then, the data should show up if there's going to be inflation pressure or whether the labor market has softened so much that he will have to focus on reviving the economy rather than to fight inflation. Okay, but I've always maintained the job will be very difficult because not only will the labor market be soft, we'll also be seeing the return of inflation, especially if the Middle East crisis blow up one more time, because that will directly impact crude oil prices, which will in turn cause inflation to flare up. So again, watch the Middle East for clue, and of course, watch out for this Thursday non-farm payroll. Okay. Now, this is what Trump has been saying. He is trying to undermine the current chairman, which has his term does not expire until May next year. So practically, he has 11 months to continue to set policy. But if Trump announced his candidates early, okay, that will seriously undermine the authority of the chairman of the Federal Reserve. So once Trump announced the name that he wants, definitely whatever Powell says in future development will be less authoritative. So that will be, I think, his game plan here. Okay, and he did mention earlier on in previous report, I remember Kevin Walsh was one of his candidates, and this Kevin Walsh was a former Fed governor. And then he also did mention his own Secretary of the Treasury, which is Scott Bessent. Okay, Scott Bessent is definitely somebody that you know that used to work for George Soros. Okay, so again, all these are things we have to consider as far as the authority of the Federal Reserve is concerned. Now, there is another twist, okay, right before he announced a deal with China, because we all know the ultimate party that Trump wants to have an agreement with is actually China, since he started his Liberation Day tariff. Okay, to date, other than UK, China is reportedly the other country that has come to a deal with United States. But so far, nothing has been signed. Okay, that is the problem here. And going by his 90-day pause, I think he doesn't have time. Depending on how you look at it, if the 90 days pause starts on April the 1st, the 90 days will end on the first day of July. Or uh, depending on the date that he announced the 90-day pause, that will put the deadline 90 days pause at July the 9th. Okay, so that's not a lot of time. Okay, so if he cannot get 90 deals in 90 days, which is not almost impossible, so I think he's trying to make sure that he can actually seal up a deal with China. China has expressed, or rather the common language they use is that they have a framework now, and this week we heard that there is progress in this framework, and China has agreed to relax its control over rare earth mineral. So Trump was the among the very first to actually announce that he has a deal. Okay, now we will have to consider. And before that, he actually now says China can buy oil from Iran. Now, remember, not too long ago, I think at the beginning of May, he did mention that any countries that buy Iranian oil will be hit with secondary sanction. So within 2 months, less than 2 months, okay, he changed his tune on Iranian oil. We all know China is the biggest buyer of Iranian oil. So when he say any countries that buy oil from Iran, okay, will be hit with secondary sanction, he's obviously referring to China. Now he says China can continue to buy oil from Iran. Maybe that is an olive leaf that he's giving to Iran, hoping that they will seriously come back and denounce their nuclear program. And this is also something very weird to me. If Trump claims that the three nuclear facility has been totally destroyed, and Iran, if we believe him, then Iran will have no ability to continue the nuclear program. So if that's the case, why wants Iran to come back to negotiate a nuclear deal? Because if you have defanged Iran, then there is no need to give concession. Trump said that he is prepared to offer Iran $30 billion in exchange, okay, for a deal. So that is very strange to me because that means to say that it is very obvious the facility are still standing. They are at best only pushed back by a few months. If they really are determined to produce the bomb, it will not be beyond Iran to actually produce them within the year. Okay, so here is something that is contradicting himself, and we will judge him by what he do and not what he says. Okay, so this is the deal that the US actually mentioned on Friday before the market opens. That was the news that came out. Okay, so sorry, the content here is wrong. I will update the headline. So basically, he has a deal, and I think Trump and his negotiating team allure to the idea that China will actually open up completely the export of rare earth mineral to the United States. But China has more than one time has repeated that their rare earth export is only limited to commercial use. And if any of those minerals land up as weapons, for example, then of course China reserves the right to stop further opening up of the export of rare earth minerals. But already we can see that Trump himself has been celebrating this, thinking that it will be a carte blanche approval to export this rare earth mineral. I think China is not as stupid because if you allow this rare earth mineral, which is very critical in producing the magnets and for stealth coating, uh, to actually end up as weapons production, at some point this weapon will come back to haunt China. Okay, so definitely China knows that they have something to bargain with, and so long as they restrict the U.S. military complex from getting their hands on rare earth, okay, then it is one way to deter the U.S. military adventures. Okay, so we will continue again to watch this. So as far as economic is concerned, we have the first major news. Remember, this is the third and final reading of the U.S. gross domestic product for Q1. Remember, Q1 first estimate was down negative 0.3, okay? Not 0.3, correct. And the second reading was a slight improvement of negative 0.2. So now they expect negative 0.2 to stay for the third and final reading. It came in worse than expected. It was negative 0.5. But yet, on the day when this data was released, the Nasdaq hit fresh all-time high. It's a little bit of a mind twister here. Why is it this data set, which in regular times, okay, would have caused a sell-off in US equity market, caused the Nasdaq to go into fresh all-time high. And that sentiments carry into Friday, all the way into the closing bell on Friday, okay? So we can see that not only is the Nasdaq 100 broke new high, I think the S&P 500 also broke new high, okay? The only laggard are the Dow Jones and the Russell 2000. So just bear in mind, Q1 has been bad. Now we are at the end of June. By next month, we will be knowing the first estimate for Q2, and it's very likely to be worse than this number that we see for Q1. We also saw the release of the Fed favorite inflation data, which is the US core personal consumption expenditure. Month over month, it has bumped up to 0.2% from 0.1% in May. If you look at the chart on the left here, you can see that 0.1 has been the case for March and April. For May itself, it doubled up to 0.2. Okay, of course, it's nowhere near the 0.5 here. Okay, because that was the month of February. Remember, that is when Trump actually mentioned the likelihood of his tariff policy. So people were front running that expected increase in tariff. So we can see there was a bit of a bump up in expenditure. We also saw the same thing in the retail sales. Remember the last week, we also saw retail sales bumping up during the same period before it starts to deflate. So the more important number is the year-over-year number, which is the chart on the right here. Here we also see that year-over-year, it has increased. It has been revised higher. Original data came in at the beginning of the month was last month was 2.5%. Okay, now it was revised up 2.6%, and the latest reading is at 2.7%. So we can obviously see there is a bump up in this personal consumption expenditure, which is inflationary. Okay, so based on this data, there is even less reason for the Fed chairman to actually cut interest rate, because right now here we have data suggesting month over month and year over year, we have seen a marked increase in the PCE numbers. Okay, although it is not by a lot, but we can see it is not moving in the right direction. It's supposed to be either staying flat or go down. But now we can see that for the month of May, it has both bumped up, whether it is month over month or year over year. So as far as the Federal Reserve is concerned, they really do not have the incentive to cut interest rates based on this number. Now, as far as the market overall performance is concerned, we can see that it has been a very, very good week for US equity markets. Now, the laggard obviously is the Dow Jones Industrial Average, which is a premier index used by fund managers. We can see that it is nowhere near the all-time high, which is 45,000. That was seen in December of last year. So we can see the market has actually improved, but it is nowhere near where the Nasdaq and the S&P 500 has been trading this past week. Okay, this is the S&P 500. We can see this is a new high. 6,187 is the brand new high for the S&P 500. Now remember the difference between the Dow Jones and the S&P 500. This is a retail-orientated index. Meaning to say that for some reason, retail investors are more bullish than the smart money, which is represented by the Dow Jones. Okay, here we have retail investors taking the equity index in the S&P 500 into fresh all-time high. The interesting note here is when I compare this with the volume and open interest in the Dow futures, which can be if you go to CME website, you can find the open interest and the volume. The volume wasn't fantastic, although on Friday there was a tick in volume, but it is nowhere near the usual rush into new high, not accompanied by a sharp rise in the volume on a relative basis. Okay, the same can also be seen in the Nasdaq. Now, Nasdaq has been trading at a fresh all-time high throughout the whole week itself. On Thursday, when the GDP number was revised to negative 0.5, we saw the market broke into new high, and that momentum carried on into Friday. And now the all-time high, the highest ever traded, okay, was 22,603 in the Nasdaq. So based on the momentum that we have seen in Nasdaq, it has been quite remarkable, because during this phase from mid-February all the way down to the first week of April, okay, this is the Liberation Day collapse. We can see that the Nasdaq was down 22% at the lowest point at 16,542. Now the market is at fresh all-time high. So you can see the swing here is very exaggerated. Again, the Nasdaq 100 is a very retail-oriented index. So this is also a reflection of the bullishness among retail investors, which is not necessarily a very bullish development. Okay, if you ask me. But technically, it does look like the market has enough momentum to continue higher. Okay, but be very careful chasing this. This, in my mind, could be the tail end of a multi-decade rally. Okay, the market remains very, very bullish, even though there is the risk of a sharp pullback sometime in the third quarter or maybe in the fourth quarter of this year. There is a possibility that any kind of pullback was unlikely to be able to be to damage the overall bullish outlook in US equity markets. Okay, so this is the US Treasury yield. It has come off at one stage in May towards the end. This time last month, the 10 years US Treasury yield was above 4.5%, which is very, very high. Now, on Friday closing, it's down to 4.285. So that it has eased off a little bit. But overall, we can see that the coming month is going to be very, very highly pressured, because of a few things. The US needs to roll over, rather the US Treasury needs to roll over 6.5% or $6.5 trillion worth of short-term treasuries. Okay, and if the yield doesn't come down significantly, they mean to say they will have to borrow at very, very high interest rates, which is not sustainable. Okay, so this is one thing. The other thing is, of course, the US debt ceiling is coming due by August, and August is inconvenient because Congress will recess, will go into recess, meaning to say that congressmen will go back to their own hometown for holidays. Okay, so they need to actually strike a deal sometime in July. Trump is of the opinion that he wants to abolish the debt ceiling altogether. Unlike previous administration, where every time there is a negotiation to increase the limit, there is a lot of horse trading, and they will keep the market uh, uh, very much on tenterhook. They always only reach a last minute deal. Okay, but right now I think President Trump has the support of somebody within the Democrats Party, a lady called Elizabeth Warren. She is also in favor of actually removing the debt ceiling. If Trump managed to do that, he managed to do what previous US president has not been able to do, which is to abolish the ceiling altogether. Meaning to say, they take away the cap, uh, restricting the US Treasury from issuing even more US Treasuries, meaning to say to borrow even more money. Okay, so for that, I think it's paramount that the yield comes down. Right now, we're beginning to see the yields are beginning to come down, and now we have two Fed governors openly say that they favor a cut in July. Okay, very much music to Trump's ears because he has been talking about cutting rates every single week. And the way he wants to cut interest rate, currently the US Fed fund rate is at 4.5%. He's talking about bringing that rate down to 2.5%. So we are looking, if Trump managed to get his way, he want a massive cut in interest rates. Okay, so not sure whether he's going to be able to get what he wants, but you can see that he definitely need interest rate to come down pronto. Okay, and of course we all know that the U.S. Senate has not U.S. Senate has actually passed the Genius Act. So I think in the coming week, there's a high possibility that the same bill will pass through the House of Representatives and then it will be presented to Trump for his signature. The other big legislature, it is the one big beautiful bill because Trump wants to cut taxes and he wants to borrow even more money. Okay, so both piece of legislature is going through Congress right now. He said they better provide him those bills for his signature on July the 9th. Okay. It's also very interesting. He mentioned July the 9th, which is the date where his 90 days pause actually ends. The latest is that he is also likely to extend the 90 days pause. So this is the latest news coming from the White House. So Trump is being true to form. Things that he say never stick. Okay, and sometimes he reverse what he meant, what he wants. Very shortly after he announced it. Okay, so this is the price of spot gold. Spot gold did not go into new high. Okay, the high remains at 3,005. In fact, we did see prices of gold dip a little bit, by more than $200 per ounce. And there is the possibility we will see further easing in the gold price. Okay. And the fact that gold did not explode to the upside, take out the all-time high that we saw in April 22nd, during Monday's opening because the US struck Iran over a weekend. So these days, weekend are very dangerous period because there's no way market can react in a weekend. So when gold market opens on Monday, there was a bit of a bump up in prices, but there was no runaway prices. Unlike oil prices actually shot up in Asia early morning on Friday, on Monday before it collapses. Okay, so there is later on when I go to crude oil, I will show you or I'll give you my reason why I think there is that massive sell off in crude oil. Okay, but gold remains very much in a bullish trend. The pullback that we see or continue to see may last another week or so, going all the way into July. Perhaps the next rally in gold may come in August. So July, August is definitely if oil prices or gold prices starts to rally again beyond all-time highs, especially for gold, then I think the likely time frame is going to be sometime in August. Okay, so the whole month of July is going to be very interesting. Okay, but I do see troubles ahead. So this is the price of crude oil. You can see crude oil went up to $76 per barrel, and that is on this is based on the futures chart. Okay, based on the spot CFD chart, it went up to $78.40 per barrel. Okay, so we can see after the very strong opening, the market go up by a little bit. Market opens at $78 per barrel in the CFD markets, and then inch up to $78.40 before it unraveled. And this is a very, very sharp drop. We have not seen such a sharp drop in oil market within 48 hours. This happened within 48 hours. Okay, by Tuesday, we can see that crude oil is already below $64. So there was a massive, massive sell-off in crude oil. A lot of people attribute this sharp sell-off to uh, uh, oil companies. Okay, oil companies and oil producers locking in the price of crude oil. Okay, so as the market rally on Monday morning in Asia, a lot of this institution came in to sell the futures to lock in the future price of crude oil above $75. So that saw crude oil prices continue to slide. Okay, and it has now been trading just around $67 in the future in the spot market. So this is the dollar index. Dollar continued to trade lower. In fact, it has been trading lower and lower, and this is the lowest we have ever seen the dollar index in 3 years. So this is again something that we want to watch, but I think we are almost at the tail end of this very big drop. Okay, we can see at the beginning of the year, the dollar hit 105, 109 half, and it has been sliding. So today, the dollar index essentially has lost 10%. And this is actually quite short a drop in so short a time. Within 6 months, you can see that the dollar had lost 10%. But be careful, very careful in selling at current price. Okay, I think we will likely see a bottom very, very close by. My target is about $95 thereabout, and I am actually looking at the higher time frame. The dollar index is very much in the bull phase. Okay, so I won't be surprised if the market continue to go lower. It will attract a lot of institutions to renew buying the dollar. Okay, so this could be something to watch. The money could be for the next 6 months could be to buy the dollars. So if the dollar is going to be bought up, I think the currency plays for those who trade currencies would have to consider selling all the major currencies. Right now, the momentums in major currency continue to edge higher. We see the sterling going higher. We see the dollar, the euro going higher. We see even the Singapore dollars going higher against the US dollars. But I think this could be the tail end of the move. Okay, be very careful. Here we have Bitcoin. Bitcoin is consolidating. You can see that Bitcoin all-time high was actually in the third week of May. So this time last month, we can see Bitcoin hit 111,800. So the market did not react. I think near term, we probably will see a dip in the Bitcoin, but overall, it is very obvious Bitcoin is in a very bullish phase. Okay, is it time to go back in to buy the digital assets? It does not look to be very bullish right now over the last since the market hit a high. Okay, the 111,800. But we can see that the market remains very elevated. Okay. So now we go into the chart itself. Before I go into the chart, let me check if you have any question for me. Well, there's quite a bit of question. Davey is asking, what is the likely outcome if there is a cut in interest rate in coming months, as US data is quite obviously can be manipulated? Nobody really knows, but based on what the Fed chairman has been telling us, either he is playing poker with us, keeping a straight face and getting ready to cut interest rates, or most analysts believe a cut is not very likely. In fact, the odds of a rate cut in July is only about 23%. Okay, so the world is not anticipating a cut in July, but when it goes into September, the odds increase dramatically. Okay, so the question is, will the Fed chairman continue to look at inflation to decide whether to cut interest rates, or will he actually cut interest rates, especially if this week's non-farm payroll come out to be worse than expected. Okay, it is very, very likely because we are beginning to see the jobless claims continue to climb. And this is the highest we have seen the jobless claim climbing for quite some time now. Okay, since the low in 2022, jobless claims continued. Jobless claims has been accelerating. So that could be a sign that the job market is not as resilient as we are led to believe by the non-farm payroll numbers. Okay, so again, the odds are not very, very high, but we are almost at a point whereby it can go either way. Okay, Jim is asking, with the PCA at higher than expected, do I think it will deter the Fed from cutting rates in July, despite some members mentioning about cutting rates? I think based on the data that we saw this past week on the PCE numbers, there is no reason for the Fed chairman to cut interest rates. If it has stayed constant, then maybe that increased the odds. But now we have obviously a month-over-month and year-over-year numbers going higher. It is definitely illogical for the Fed because to actually cut interest, because he has always been saying, look at the data, and the data suggests that there is the resurging of inflation. Of course, the full effect of the tariff has not come in yet because we are at the 90 days pause. Once the 90 days is paused, and assuming President Trump does not extend the 90-day pause, okay, then obviously this number will not show up in a very dramatic way. However, if he starts to dictate what countries pays in terms of tariff for the benefit of selling goods into United States, then it could really, really be very, very inflationary. Okay, you can see that Japan has been not been very cooperative. Japan does not want to increase defense spending. Japan does not want the yen to go strong. That's the reason why we can see that despite pressure from the US Treasury to the Bank of Japan to hike interest rate, the Bank of Japan has been resisting the US pressure to hike interest rate, because if they hike interest rates, okay, it will be even more expensive to service the JGBs. Right now, the JGBs have the same situation as the Federal Reserve. Nobody wants to buy US, the Japanese debt issues, and that is a problem. Okay, so right now Japan is at the crossroad. Either Japan choose to work closer with the Asia Pacific nation, principally with China. Okay, because why would Japan commit harakiri, okay, by allowing the yen to go even stronger? Okay, because they cannot compete in the international markets, because the US insists on that steel and aluminum tariff of 25%. And the biggest export the Japanese sells to Americas are automobiles. So the 25% tariff slapped on all steel and aluminum products is directly going to impact the Japanese automobile companies. You look at Toyota, Toyota has seen their earnings being clipped already. Okay, so we can see that the pressure is getting to be quite immense. If the Japanese decided to lean closer to China, definitely they will go into the American bad books, okay, which will invite even more pressure. So right now, Japan is at a stage whereby if they kowtow and they actually kneel, okay, and succumb to US pressure, it is as if they are kneeling for the second, what we call the, remember back in the 1985, where we had the Plaza Accord? Okay, I think current situation is the Japanese is facing another Plaza Accord, okay, in which they'll be pressured, okay, to make the yen stronger. Remember, during the period between 1985 to 1990, the yen actually appreciated by 50%. Okay, so this is not something that the Japanese wants to see, because it will totally destroy their economy. Okay, so we continue to watch this because I think at the end of the day, the Japanese is right now is at a place whereby they are either at a rock or they jump off the cliff. Either way, it's going to be bad. Okay, but uh, Buck Song Lim is saying with implementation of Genius Act to push up the dollar, yes and no. Okay, because the Genius Act is all about stablecoin, providing the guardrail and regulation for the issuing of stablecoin. Now, stablecoin, although they are pegged $1 for $1 against the US dollar, is not a dollar. Okay, because these are issued by private enterprise. Remember, only the Federal Reserve has the authority to print the dollar. So right now, if the Genius Act comes into law, okay, which I think it will, okay, then the authority of the Federal Reserve will be clipped because without having to print new dollars, the stable coin will ensure a rush of dollar lookalike. Okay, and the whole idea is to provide another source of demand for U.S. treasuries. Okay, and it's about the timing. If the treasury can sell more U.S. treasuries supported by the demand from stablecoin, it practically solved their problem. Okay, with the launch of stablecoin, the U.S. problem of not being able to find buyers for the treasury uh, will be solved because instead of institutional buying, now we have retail investors like you and me buying the U.S. treasury indirectly. Okay, so is maybe have some flow, what you call rub over effect on the dollar. Okay, so the timing of which may also coincide with a bottom in the dollar index for all we know. Okay, but if you ask me, a stable coin is not the same as a US dollar. Okay, but they have it works in the same manner. Okay, so for the uninitiated, it will look like the dollar have new support. The SNB, which is the Swiss National Bank, intervened as Swiss franc is at 14 years high. Right now, the Swiss franc interest rate is zero. Okay, and the whole idea why the Swiss National Bank keeps the Swiss franc interest rate at zero is that they do not want people to buy their currencies. Okay, because during the pandemic and during the start of the war in Ukraine, uh, they have also issued a lot of Swiss franc, okay, printed a lot of Swiss franc, but instead of buying their own bonds, they were buying overseas bonds. They were buying other people's bonds, okay? And now we can see that the Swiss franc is so strong, and because when you buy other people's assets, those value has not been able to catch up with the rise in the Swiss francs. So technically, those investments are already losing money. So definitely they do not want the Swiss franc to be so strong. In fact, they want the Swiss franc to be weaker. But when you look around the entire world, there is simply no safe haven. The traditional safe haven is US dollars and Japanese yen. Both these two currencies are not looked upon by fund managers right now as being safe. So Swiss franc took over the role. Also, we are also seeing a little bit of those flow going into the Sing dollars. And definitely Singapore does not want to internationalize the Singapore dollars because you will lose control. Okay. So it is not a welcome move, but the demand just keep on coming for the currencies. So right now they are trying to dissuade or de-incentivize speculators from buying the Swiss franc. So they keep it at zero. Okay. And it did not stop the Swiss franc from charging even higher. This past week, we can see dollar Swiss continue to drop. Okay, meaning to say that the Swiss franc versus the US dollars, the Swiss franc is at a 3-year high. Okay? Against the dollar, thanks. What I mean by against the dollar? Oh, dollar Swiss, you mean? Yeah, later on when we go to dollar Swiss, we will talk about it. Okay, one more question by Sam regarding gold. Uh, why gold is dropping together with the dollar yield and the dollar index? Okay, theory is that gold and dollar move in opposite direction. Okay, right now we are seeing a phenomenon in which both are dropping. The dollar is dropping, gold is also dropping. Okay, So gold has always been highly manipulated. Okay, so when gold dropped, okay, it could be due to very, very serious manipulation. Okay, like I said, there is a lot of delivery in COMEX for the month of May. Okay, June is likely to be the same. So if there's more delivery for COMEX precious metals like silver and gold, why aren't the price of silver and gold going up this past week? It did not. Okay, so there is a lot of manipulation going on. So it is not necessarily the case whereby the dollar and precious metals have the inverse relationship cast in stone. Sometimes that correlation does not work like right now. Okay, so this is something that we want to consider. Sometimes the theory doesn't work very, very well. All right, let me go into the chart itself. As usual, we start with Dow Jones. So we are at practically the month end. Okay, so you can see this month has been a very, very, very positive month, very strong. This is the Dow Jones monthly time frame. We have one more day of trading, which is tomorrow, but I'm very sure it will looks very much like what we are seeing right now. It is highly unlikely that with one day to go, we will break into all-time high in the Dow Jones. Okay, there is still the possibility that this high will be unmolested by the end of trading by tomorrow. But July is another thing. Okay, July is going to be highly volatile. Likewise, is August. So for those who are still long equity markets, the danger period is actually fast approaching. Something that may happen in July or latest by August. And I think that bad news may come from the Middle East. Okay, so this is something that we will continue to monitor because yes, the market is so strong. Okay, this counter trend has only lasted what 1 month, 2 months, 3 months, 4 months before it starts to rebound. Okay, so this rebound now seems to be gathering strength and momentum. Over time, there is the risk that this high here may not even hold. Okay, but for now, it is the laggard among the major equity index. Okay, so when we look at this, maybe I should take myself out of this. I should cancel myself. Why can't I move this? Okay, right. Now, if I want to minimize this. Okay, now we talk about the weekly time frame. The weekly time frame has seen also very robust move towards the end of trading this week. We can see that this is one of the strongest flush that we can see. Okay, when the market opens and then stays at the highest of the opening at the closing, this is very strong momentum. Okay, so this momentum for now may be likely to continue into the new week itself. Okay, like I said, is probably will not be able to change the high here on the monthly basis by tomorrow, but on a week basis, there is a possibility in the coming weeks we probably will see a serious challenge of the Dow Jones. Immediate target is about 46,000 in the weekly time frame. Here in the daily time frame, you can see that the market also very strong. Okay, in fact, I have to do this. There is a new parameter right now. So we are not too far away from the all-time high when you look at it this way. All right. So pattern-wise, it looks very, very strong. In a lower time frame, like 4 hours, it is all green and there is no longer any counter trend. So all said and done, I think the momentum should be able to carry this index even higher in the coming week. So when you look at the other index, which is the S&P 500, it has already resumed its rally. The counter trend that we saw, okay, in April has been eliminated. So right now we are in all-time highs in the S&P 500. Next target is 6,440 in the monthly time frame. The same goes for the weekly. New high is right ahead. 6,360 in the weekly time frame. Very, very strong market. And in the daily time frame, just as strong. 6,520 on the daily time frame. But you can see there is no counter trend. Counter trend has been eliminated. Now the market is charging higher. Likewise, in the lower time frame, 4 hours is very clear the market wants to go higher. So any kind of pullback, okay, is likely to find some kind of support around this area. Okay, you can see that on a close to close basis, this area here is just under 6,000. If the market ever pull back, you can probably expect the same people who have been holding the market at 6,000 to come out again. Okay, so if the market ever pull back, 6,000 could be a good level to continue to be buying the dip for now, because I don't believe even the market comes down, it's going to create a crash unless something really, really bad happens. Okay, if not, then I think the market will continue to be bought to see higher. The Nasdaq 100 is equally buoyant. We can see on the month-over-month basis, the Nasdaq is at all-time high. 22,618 is the last traded high in the CFD market. Next target will be 25,000. Here it says 24,900. This is based on the monthly time frame. The weekly time frame is equally bullish. Again, there is no counter trend in place. Target is at 26,500, even higher. Daily time frame, they're all pointing in the same direction. Okay, 24,000. There is nothing standing in the way of both the S&P 500 and the Nasdaq 100 from going higher. The only concern is the not so strong volume compared to previous run up. Okay, so if the interest does the open interest and the volume does not pick up significantly in the next next 4 trading days, then it will point to something a little bit more cautious, because I'm not seeing the regular surge in the volume accompanying this break of new all-time high. Okay, so that to me is the only warning sign, but we cannot use that to actually trade against the market. Okay, whatever you do, don't sell this market, because this market currently is so bullish. Okay, in a 4 hours time frame, we are very near a target at 22,600. Okay, if the market ever pulls back, this could be a good area to consider. Okay, this area. Okay, 20,600 to 20,850. So if the market ever pull back, I'm not looking to sell. I'm looking, hopefully the market can come lower into this bracket to buy. I'm still looking for buying opportunity, or even though I'm convinced that this is the last tail end move. Okay, and this tail end move is supposed to be the most explosive. So do not stand in the way of the market. Now, if we have no question for US equity market, we'll move to the European markets. We look at the FTSE 100. So we can see the FTSE 100 is flirting with the all-time high. This high was actually traded when in March of this year. 8,909 was a high. Now this past week we have just short of 0.3, okay, to match the all-time high. But I think the momentum wise to spill over from Wall Street into Europe. Okay. So even though the fundamentals are poor in Europe, the equity markets is not reflecting that. Okay, so it has been bought up very strongly. So again, in the weekly time frame, there's no counter trend in place. The market now is getting ready to resume higher. Target in the weekly time frame is 9,500. Daily time frame remains there is a counter trend still in place from the high of this past 2 weeks high. Okay, 8,909 remains the high against the all-time high at 8,909.20. So we can see that this last 2 days of trading before the weekend, we can see that buyers seems to be coming back, supported by the gains seen on Wall Street. So, yep, looks like FTSE is getting ready to rally even higher. Target on the daily time frame is 9,005. 4 hours still in that corrective mode. Ideally, we can see further corrective move to the downside, which is highly unlikely. But if it ever drop to below 8,006, that could be a good area to pick up some more, because obviously there's a lot of buying interest within this bracket of prices previously. Okay, so all equity markets so far are showing the same sign, strong. Okay, so even in the DAX, we have an all-time high. DAX, which is the German index, traded to a new all-time high at 24,471 this past in June. Okay, so this is a new all-time high. For the target for this move here on the monthly time frame, I can move higher. So it will depend on the weekly. Weekly is calling for 27,500 thereabout. So this is very strong. Again, no counter trend. The market is getting ready to go higher. But I think there is the counter trend, although it's not fully formed just yet. I can tentatively say that this is a counter trend waiting for another week of rally. So right now in the weekly time frame, there is a counter trend. But if this week we see a blow up above 24,471, then of course this counter trend will not materialize. But it looks like there is going to be currently looks like uh, uh, a counter trend could still be at play here. But based on the momentum we see, it's highly unlikely that this counter trend will actually materialize. It could easily cause a blow up above the high that we see here, 24,471. Here in the daily time frame, market is getting ready to blast up. Okay, we have one whole week of rally. Every single day, the market has been going higher, except for midweek, we have a bit of a pullback. But Thursday, Friday, we saw the markets close at the higher end of the trading range. So if this momentum continues, 24,471.5 is highly unlikely to hold. There is a possibility we will see this high taken out, gunning for anywhere between 25,500 to 26,300. Lower time frames also shows the same thing. There is no longer any counter trend. The counter trend has been eliminated. Market is getting ready to go and take out this line. Okay. So European markets is also gearing to go higher in the coming days. Let's look at Asia. And of course, when you look at Asia, we look at the Nikkei 225. Nikkei is also rumbling. Remember, Nikkei has never been able to close significantly above 40,000. This past week it did. Okay, we have one more day of trading, but it looks like the 40,000 now has been taken out, because this past week we saw a closing above 40,000. There are many months in which 40,000 was breached, but it always closed lower. So this is the first inkling that something has changed. There is that surge of buying across all equity markets. So for those who are into equity markets, looks like it's going to be a good week, okay, ahead. So this is the weekly time frame. We still have the counter trend in place, but I say the last time it closed above 40,000, that was here. That was in I think January. Okay, okay. So we can see that prices is now close back above 40,000. Whether it can hold, I think it can hold. Okay, but the last time it did the same thing, something similar, close near the high of the trading range, but the following weeks it collapses. Will it do the same thing again? We don't know. But look at Wall Street, it seems to be getting inspiration from Wall Street. So there is a good likelihood that this high here that we see, 42,519, may be challenged. Daily time frame is very, very strong. You can see there's no counter trend in this market here. Immediate target 42,600. Very strong. 4 hours time frame, equally strong. Nearby target 41,150. So now that leaves Hang Seng. Hang Seng is also looking strong, although not as strong as the other currency, but it closes near the high of the entire month. Okay, so tomorrow being the last trading day for the month of June, ideally we want to see a close above 24,800. that will be strong. Okay. In the weekly time frame, this is what we are seeing here. The market actually found support here. It pulls back, drop, have a very strong reaction to the upside within this bracket of prices uh, 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 between 18,600 to 19,960. So the pull up, the bounce on here was actually quite strong. So there is the momentum above here. Like I say, if we can actually close significantly above the 25,000, that will be the strongest signal we can see so far. Daily time frame, I think it is not as strong, but I think the momentum can carry it forward. Okay. 4 hours time frame, we have a counter trend in place, unfolding in a very shallow three wave, highly unlikely to collapse. Okay. And even if the market should pull back very deep, I think there is demand within here. This is the area of demand, at least for now. This bar here represents very strong support. This area. This area is defined as the low here, 24,077.8 to a high of 24,242.5. So this area where the market is currently dipping into could actually see buying interest re-emerging, because when we look into the chart here, there was a very strong uptick in prices. So this flash is the clue. The few bars before it is where the demand actually starts to accumulate. Okay, so if there's going to be any demand, it's very likely to come from this bracket of prices. All right, I'm done with equity markets. So it looks like there's no new question. Let's move on to the dollar. Now, of course, I think the dollar is near the tail end of its move. Now, in previous session, I did tell you about the ABC move. This is the euro versus the dollar on the monthly time frame. The euro is fundamentally weak, okay? But we have seen the euro strength from as far back as 2022. So this is working out to be a ABC. Highly unlikely it will accelerate above these 2 points here. The higher end will be 1.2555. Okay, highly unlikely. Okay, what I'm thinking is that going into the last leg, I think the 1.19 to 1.2 is going to be heavily contested, and we are not that far away. This week high, we can see that the euro dollar has actually gone up to above 1.175. So we are at the very tail end of this move. And if the market finds sellers within this bracket of prices somewhere between 1.19 to 1.2 and couldn't go higher, it also reinforced the idea that previous high cannot be taken out. And this is a classic definition of a downtrend. If this current rally in the euro dollar cannot break above these 2 points here, resulting in a pullback, this pullback may signal the resumption of a very long-term downtrend in the euro dollar, okay, which will mean that the low that we see at 95 cents will eventually be taken up, okay. In fact, we have a target here at 60 cents, okay. So selling the euro, buying the dollar is a long-term trend. So we are, like I say, the dollar is most likely at the tail end of this drop. So if there's any sign that suggests that the buying of the strength in the dollar comes back, it is suggesting to us the resumption of the longer time frame, which is a bull market for the dollar, a bear market for all major currencies, including the sterling, including all the other major currencies. Okay. So this is the weekly time frame. You can see if ABC, the equality point is 1.1917. The nearest peak to contend in will be 123.5. So somewhere around here to here, anywhere between this high and the equality target of 1.1918, okay, the market may find a top. And if there's a sign of heavy selling, okay, I myself will be looking to position a short euro dollar position for the long run. I will keep the position even though I'm paying swap. Okay. So this is the daily time frame, very much in line with what we are seeing. This is a 1, 2, 3, 4, 5. So now that we have a breach of 1.1573, it has technically fulfilled the 5 wave up requirement. The question now is where would it lose momentum and start to come off? Like I said, if we are not that far away, 1.19 is just right ahead. So look for potential re-emergence of long-term seller in the euro versus the dollar. The sterling is the same thing. The monthly time frame, although it doesn't look like a classical ABC, but you can see that the nearby top here is 1.42 half, 1.43 half. So anywhere between these two peak here, the market could actually face a very stiff resistance. Okay, currently the market closed at 137. From 137 to 143 is only about 500 pips. It's not a lot. Okay, so again, top side is also quite limited for sterling. The nearby top here is 142 half. 143.70 was a high of this past week. So top side is getting to be quite limited. So if there's going to be any kind of trade that I'm looking at, like I said earlier on, I'm very keen to be looking to buy the dollar, sell all the major currencies. This is the daily time frame. Continue to go higher. It does looks very, very, very strong. Okay, but I am very leery of that ABC move in the higher time frame. So what about dollar Swiss? Dollar Swiss has been also in the highlight in the limelight. You can see the dollar Swiss has been going down, meaning the Swiss franc has been very, very strong. Okay, it takes 80 cents to change $1. Okay, so you can see that the Swiss franc is very, very strong. And this past week, you can see that another wave of buying in the Swiss franc is very evident here. And when I say buying, it means buying of Swiss franc, selling the dollar. So here it still works. I think there's a good chance the low here at 71 cents may actually hold. So we'll continue to see whether that is the case or not. If 0.7068 holds, okay, as the market goes into this bracket of prices, anywhere the dollar Swiss between 0.76, yeah, correct, 0.76 to 0.71. I think the area here is going to be a buying opportunity. The last time the market held was just under 0.76. Okay, obviously there is buying interest. I mean to say that somebody is supporting the Swiss, either there's intervention, likely to be intervention. Okay, I think maybe it could be the Swiss National Bank, capping the Swiss franc here against the dollar. So now, as the market goes into this bracket of prices, look out for some kind of buying dollar, selling Swiss activity to occur just under 0.76. So that will be something to consider. Okay, on the week basis, this is the lowest we have ever seen in 3 years for the dollar against the Swiss franc. The market has been kept just under 92 cents. You can see here. Couldn't break. Okay, so there is a lot of people selling the dollar for Swiss franc, but we are very close to the tier end, less than 500 pips, maybe 300 pips. So when we look at dollar Canadian, okay, we don't see a massive sell-off in the dollar Canadian. Okay, yes, the dollar remains very strong. The dominant trend is still favoring the dollar. We have the Canadian dollars coming off month after month for 5 months. Okay, after tapping out at 1.48. So 1.48 seems to be the barrier to overcome. But I won't be buying the dollar versus the Canadian. Yes, it does looks very strong, but I think the European currencies will offer even better range, in my opinion. Definitely one of the currency pair to watch is dollar yen. The Japanese bank, the central bank, is under a lot of pressure, not allowing the yen to get stronger. Okay. By right, we should see lower dollar yen rate. Okay. Meaning to say yen should get stronger, but we are not seeing it. Okay. We are still seeing that struggle. Yes, the market may actually trip below the 139.60 level, which is the most recent low. But if we get a dip below, equality move also tell us that somewhere between 131 to 136 half, there could be buying interest. So if you believe that eventually the Bank of Japan is no match for the Federal Reserve, or the US Treasury or President Trump, then there is the possibility that they will consider to continue to weaken the, uh, the the yen. But weakening the yen also comes with its own problem. Japan import practically all their oil. So if the yen continue to weaken, the cost of importing crude oil in a climate whereby crude oil can easily surge higher is going to be another headache for the policymakers in Japan. So they cannot have too weak a yen, they cannot have too strong a yen, because on the one side, if you have too weak a yen, your input cost goes up and it will translate to higher inflation. Okay? And that will mean they will have to hike interest rates. And if they hike interest rates, the cost of servicing their massive mountain of national debt will become unbearable. On the other hand, if they allow the yen to strengthen, okay, what will happen to their export? They can't compete. So do they die? Don't do also die. So I think the Japanese have is currently in a situation whereby they may they may be forced to do something dramatic. Okay, either they pivot towards China and earn the wrath of President Trump, or they agree to kneel down and agree to another Plaza Accord deal, which will devastate their economy. They mean the fight for the last 30 years will be for naught. Okay, so Japan is in that position whereby it's very, very difficult for them. Okay, so continue to watch the Japanese stock market, because under such a condition, okay, it is very hard to imagine how high can the US, can the Japanese equity be. Okay, here on the weekly time frame, we can see that this technical pullback three wave have not fully completely moved. I need a move below this low here at 139.60. Ideally into 136 half to 131 half. That would be ideal, because the market can go lower. There will be support somewhere here, okay, above 130. Because this is a very long-term bull market. We can see on the based on the weekly time frame, this is a very, very strong bull market all the way to 2016. Okay. This is where Shinzo Abe came in the second time to be prime minister. Okay. They are unlikely to go back to those levels. They cannot allow the yen to be so strong. Here we can see that the trade to look out for will be for another dip. Okay. They will be dipping below 139. At least 140. Okay. Right. What other currency pair? If not, then we move on to gold. Let me see if there any question for me. Oh, there's another new question. Let me see what is that. Roger Kumar is asking, what could be the likely event that will trigger a dollar strengthening? Well, if the Genius Act get passed, that will be a catalyst. Like somebody will ask whether that will be a move. What the Genius Act, Bak Song Lim is asking, okay, about stablecoin and dollar. I think there could be the knee-jerk reaction once the Genius Act got passed into law. Okay, it may provide the dollar a boost, and that could be enough to, at the bare minimum, arrest the decline in the dollar. Remember, Donald Trump wants a weaker dollar. But we are also seeing from trade figure, US has not managed to take advantage of the weaker dollar to export more. They are seeing a drop in imports, but they are not seeing a corresponding increase in export. So the dollar that is weakening theoretically should actually benefit export, but we are not seeing it in the data. Okay, we are still continuing to see the budget deficit widening. Okay, what they buy from the outside and what they manage to sell to others has not really improved dramatically. At least it's not helped by the weaker dollar. Okay, so if you ask me, I think the single one catalyst to watch out in the coming weeks will be the Genius Act. Okay, everything else being equal, I think the Genius Act will have an outsized influence. on the dollar index. Okay, let's go into the commodities. Let's go into gold. Now, gold did not manage to rally the despite the U.S. involving in the Iranian warfare. Okay, so this is a bit of a surprise because I was expecting that alone should cause the gold market to actually surge beyond the all-time high. It did not happen. So that comes as a big surprise to me. And it also made me again realize that this is a commodity that has been heavily manipulated. When we look into the beginning of the year, when we hear reports that people are taking delivery of gold in London to be shipped to the United States, that was a major sign that there were a lot of people wanting to send the gold back to the United States, and that is a phenomenon. Who has the deep pocket to continue to buy? I do believe it has got to do with a lot of the threat of then Elon Musk and Donald Trump wanting to inspect the Fort Knox. Okay, we all knew that the gold in U.S. possession, supposedly 8,000 tons, they are not in the vault gathering dust because gold has no yield. You spend a lot of money to store it, to safeguard it, but it doesn't produce any income. So in order to produce income, the Federal Reserve will actually have to loan it out. And once it's in the bullion bank, they will use that, okay, to actually sell forward the gold futures to keep a cap on gold market because it has always been traditional. Okay, I used to be a gold dealer, and in the early days when I was a gold dealer, one phenomenon is that customer would choose to sell gold overnight than buy gold overnight. Because when you hold a short position in the spot market, you theoretically you're collecting interest. Right now, US dollar interest is so high relative to, let's say, the interest rates elsewhere. You can capture the interest rate difference simply by selling gold. So it has always been the case whereby the gold that has been leased out to bullion bank end up as leverage, okay, in the COMEX gold market, many hundreds times larger than their underlying. So this rally in gold will ensure that the bullion bank will be caught on the wrong side of the market. Because as much as they want to cap the price of gold, we can see that over the last few years, especially since the market bottomed out in 2015, gold has been single track. Last year, the whole of 2024, gold went up by 24%. This year alone, at the highest point, gold went up by 30%, and we are only at the halfway mark of 2025. So the pressure for gold prices go even higher is already there. Okay, so I do not know what's the story behind the need to bring back the gold from London to New York. Okay, you will probably know about the reason years later. Okay, but for now, I am technically very bullish on gold. If the price of gold pull back, I am not looking at it as a bear market. I'm looking at it for the possibility of being able to buy a cheaper price. So I definitely want to embrace this pullback in gold prices. Prices of gold hit a target. This is from this level here, this is 1.618, okay? And I have listed out this bracket of prices 3,280 to 3,670 long time ago, okay? So the market hit a high of 3,005, struggled for the last 2 months, not been able to do any better. Obviously now, if prices cannot be pushed higher, there will be a lot of profit taking, okay? So what we are seeing is definitely part of the profit-taking process. Okay, and this looks like if this is going to be a simple three-way pullback, a move back to 3,000 is quite possible. Okay, and if you look at this red horizontal line here, I draw this because there is that pivot. Okay. Okay, I saw this pivot over there, sorry. So all the way back this. You can see this bar high, and this bar low. So it's about just under 3,000, 2,955. So there is strong support here, technically speaking. Okay, so 3,000 is a very round number. It will be logical to expect people who actually buys to put stop just below 3,000. And because it's a round and nice number, the 3,000 may not even hold. Okay, what may hold is this level, 2,955 in the spot market. So in the daily time frame, what we are seeing here, the price has taken out the high here. I have to readjust this high to say that now the new resistance is over here. As we have seen, prices has gone lower this past week. So if this is going to be a three-way pullback, the target is $3,072 to as low as just under $3,000. And a good price to consider is this bar here leaves behind a clue. Okay, the prices around here, these two bar may actually be indicative of potential support. Okay, so the price ever drop, do not panic, and I don't encourage you to sell this. Okay, I don't look at this as a selling market. I look at it as a potential to reposition buying at a lower level, ideally just under $3,000. So that will be something I will continue to monitor. I will not be in a rush to go back in the market just to capture this move. Okay, if it comes, it comes. If it doesn't come, I will look at a pattern after that. Okay, so I am currently looking at the price of gold currently being supported here. Okay, this will be now if I still use the old support resistance line, anywhere along this red line could be an area of support because this is where it broke out, come back, go up. Now it's coming back to test. So where it is right now, anywhere between 3,250 to 3,295 is providing the initial support. If the market take out the low here, then this red line here will be the next clue. Obviously, if the market goes way below 3,154, obviously we will continue to see a short-term weakness. Okay, so lower to buy, in my opinion. Silver is not taking advantage of the rally, the consolidation in gold market. The high traded is $37.30 for silver this past month. Okay, this is also the equality move. You can see this move here from $11.62. This is a three-wave move. Equality is at $36. The market overshoot by $1.30, and then now it is struggling. So based on this, the pattern here is only showing us a three-wave bounce. Three-wave bounce until the market changes. Okay, it's telling me that this is a corrective bounce of a long-term bear market. Will it be able to take up even higher prices? This will be the clue. If ever the market breaks $44.21, that will eliminate any doubt that the silver market has resumed its long-term uptrend. Okay, for now, it is strong. Okay, and it has hit equality, three-wave bounce. The target here is $35.76. The high here is $37.30. So for this past week, there was no new high. This is the daily time frame. It looks like we may have an internal three-way pullback, very much in line with the current weakness you see in the gold market. So if we do see a three-way pullback in the daily time frame, we can surmise that there is a possibility of a pullback to as low as $34.25. Okay, or maybe even higher. Here I'm using the over here. Right? Minimum target just under $35. And again, this bar here provide a clue. This is a very strong up move, and the bar before it it looks insignificant, but it does provide clue that there is support at this area. And this bar here has a range of $34.16 as the low and a high of $34.63. So the price ever go into this bracket, look out for this area here to provide some kind of buying interest. If it can hold and reverse, then any pullback thereafter, just go in and buy and put a stop just below this low here. Okay, I think that would be something that I will be looking to do. Okay. Right, I'm done with metals. Let's maybe I'll show you platinum. I have not never talked too much about platinum. So platinum is something I trade, okay, but it is beginning to show me that it is possibly a long-term three-wave bounce in a largely bear market. I remember when I first started out, in my in my mid 20s, platinum price are higher than gold prices. All right. Now platinum is so cheap, okay, compared to where gold is. Okay. So for all intent purposes, this is a bear market, and this bounce from $561 is part of a three-wave bounce. Equality move is $1,577. Are we anywhere near here? I think we're still good for another $100 move at least. All right. So look out for this bracket of prices anywhere between 1,577 to 1,756 could be an area of resistance. Okay, until this high is taken out, $1,740 is taken out. I think it is still within the bear market. So in the weekly time frame, we have an acceleration in prices in this rally here. Okay, market hit a high of 1,435 and seeing the market now is struggling. Okay, and this happened this week, $1,435. Very, very strong. Market has gone parabolic. Okay, so I think there's still strength in this rally, although it's part of a longer term rebound. Okay, so this is interesting. This is a outside bar. The market have a new high, close lower than the whole of Thursday. So this Friday move is indicative that the profit taking has already set in. Because when we look at a higher time frame, although it has yet to hit equality, but on Friday, this single day movement on Friday is quite damaging, technically speaking. It will ensure further profit taking. So if you have no exposure in platinum and you still believe platinum is a long-term buy, then you should welcome this pullback. Right, I'm not going to spend too much time on platinum because it's not a heavily traded product here. Now look at oil. Actually, I am very bullish on oil. Okay, so here we see that Donald Trump wants lower oil prices. That is for him a way to control inflation. So the reason why the market hit a high and then pulled back so sharply, okay, resulting in a bar that is actually quite negative. Okay, not sure whether the market will, because of this pullback, okay, result in a move below $54.76, which I seriously doubt. Okay, in fact, I'm looking for levels to buy already. I may buy using the weekly time frame. Okay, anywhere between below $60 to me is a bargain. You can see market hit a high of $78.66, and this is a very damaging candlestick. So at least in the near term, it is logical to expect lower prices. But I think once it hits $60, it looks to me very attractive. So I will be looking for possible reversal. Okay. In fact, in the daily time frame, Monday hit a high, Tuesday continue lower, Wednesday, Thursday, Friday, each stop. Okay. It will take a lot for the market to continue to dip because the worst part is over. And we can see that this move here happens from Asia trading hours, which is very, very thinly traded, and then London and then New York, followed by another day of selling. Okay, so from the $78, $76.66 all the way to $63.72, this part here has been characterized by oil producer locking in the high oil prices. Okay, or for definitely have to be sellers. Okay, the buyer will have no incentive to lock in the high prices. Okay, again, if the buyers want to lock in, they want lower prices. The last time it go below $60, it held. The low traded was $59.34. Hopefully, this will result in another test of this low here. And if it can hold, followed by a reversal pattern, I am more than happy to go there. Okay. So the 4 hours time frame right now suggests that unless $63.72 is taken out, there could be the possibility of low being formed at the current range. There is a bit of consolidation going on, but it is very tentative. Okay, if this is taken out, so be it. I'm looking to buy below $60 anyway. Okay, but if the market can consolidate here, followed by a unusual strong momentum to the upside, I think that could be telling us near term the market has bottomed. Okay, so I'll be watching the lower time frame, but at the same time, I'm hoping it can go lower. So I am definitely looking to buy crude oil. Okay, because if the Middle East tension flare up again, oil prices is definitely going to take up whatever high that we saw this past week. Okay, let me see if you guys have question. No new question. Okay, I'll go into Bitcoin. Now, Bitcoin has not really moved. This is the monthly time frame for Bitcoin. Remains very strong. Okay, the all-time high 111,940 is a high. And on a close-to-close basis, we still have a few more hours to go before the end of this week. But again, we want to see what the market did at the end of Tuesday, at the end of Monday, because that will determine on a month-to-month basis where it closed. As it is right now, it is having the highest closing price in the history of Bitcoin. Currently, it's at 108,100. Okay, so on a closing basis, not intraday basis, closing basis is currently at the highest closing levels. So this says a lot about the bullishness, and maybe the passage of the Genius Act may be providing the ammunition for digital assets, okay, to rally. We want to watch this market. Okay, this week has been so strong, the strongest move we've seen over the last 4 months, 4 weeks. Day to day, still early, the day has not ended yet. But the moment on the daily time frame, the market take out 110,600, it will eliminate the counter trend, meaning that the counter trend is over and the market is getting ready to resume its uptrend. So by and large, it is a very bullish outlook. Okay. Although I do expect a bit of pullback near term, but if it pull back, it could provide that buying opportunity. Okay. All right. I am done with my the day's work. Anything that you want me to talk about before we end the session? On July the 17th, I'll be giving a webinar for CGIS. Okay, as you all know, that is the former CIMB. Okay, and that will be a webinar. I've already posted that registration link on my Facebook. So if you want to attend that, that will be purely on equity index, US equity index, and nothing else. Okay, and we will be focusing on the futures contract. So if you are interested to know my view, that could also be something that you can also look forward to. Anonymous wants to know about Ethereum. Okay, let's talk about Ethereum. Ethereum is not as bullish looking, unfortunately. Technically speaking, it is still bullish. Okay, other than last month, there was a run up in prices. This month has been quite disappointing. There is hardly any follow through. There was a bit of follow through, but based on the closing basis, it's most likely to be closing below last month's closing price. Okay, currently it's at 2,446. Last month closing price is at 2,540. 2,540. Okay, so nothing to see here, nothing exciting in that sense. Okay, so on the weekly time frame, we have a counter trend in place. After a very strong run up, if the prices come back down, this could be an area where I think the buyer may re-emerge. 1,730 to 1,871. Okay, remember, I'll always look for a big move like this, and after that, I'll look at what happened before it. So there's one single bar, very small, very insignificant, but today, to me, that provide a clue where the demand is. Okay, market must be accumulating in this bar here before the big run up. So the price ever dip back here, the people who actually supported the market here between this price of range, this range of prices, for all we know, may re-emerge. Okay, so if the market ever come back down into 1,730 to 1,871, and we want to see a reaction to the upside, meaning to say that the same people who buy here are back in the market. So the daily time frame here does not show us a lot. It shows that the market is pulling back from 2,877, and if this can continue lower, perhaps the nearby support is here. This is the same level as what I show you on a weekly time frame. Okay, these few bars here, about 5 to 8 bars here, are area in which the market is actually accumulating long position in my mind, because this is a very clear breakup to the upside. Okay, so something must have caused the price of Ethereum to go up so sharply, okay, in that one day. So the days before that, I think 2, 3 weeks before that, there was obviously a consolidation, and that consolidation, on hindsight, is an area of accumulation. Okay, so you take the clue from where you can see. Okay, so this provide me the clue. This one long bar here provide the clue. Okay, so for all we know, it could drift lower. All right, I think if there's no more that you want me to talk about, I would think that will be it for me today. And I shall see you next Monday. Remember, next Friday is a market holiday. The US is having its holiday. And do not stay awake on Friday because the market is not open. Okay. And also be aware that the day before, on Thursday, past midnight, the market is going to be very, very quiet. So there's no point in eyeballing the market past midnight on Thursday. It's going to be a super long end. Okay, thank you very much for your time, and I shall see you next Sunday. Bye bye.